Good morning and welcome to the first ADS Securities Fundamentals Update for the week. We'll start our video with a look at the weekend development in Crimea and China, which had the initial effect on the markets during the Asian session. In China, the daily trading band of the Chinese yuan has been revised to ±2% from the previous ±1%, and the move was expected a few weeks ago when the Chinese yuan weakened to the lowest level since May last year, while the initial reaction by the beginning of the Asian session also showed further weakening. The dollar CNH spiked up to as high as 6.1722 so far, while the speculation are rising now for another move by the central bank to raise the reserve requirement ratio, which could be done later this week. As for Crimea, the polls show that 95.5% from the people agreed to join Russia, and the Crimea will formally apply to join Russia today. Furthermore, Crimea is likely to abandon its local currency and will switch to Russia or the Russian ruble by the beginning of April. These decisions continue to add further tensions between Russia and the West, and gold was the biggest winner so far, reaching as high as 1,392, passing our target mentioned in our previous reports at 1,390, while further tensions is likely to keep the gold higher again. During the Asian session today, there were two economic leaders from New Zealand and Australia. New Zealand Westpac consumer sentiment increased to 121.7 in Q1, up from 102.1 in Q4 last year, which is the highest level since 2005. In Australia, motor sales rose by 0.1% in February, comparing to a decline of 4% in January. Going forward to the European session today, we'll be focusing on the Eurozone inflation figures. CPI is likely to stabilize at 0.8% in February, while core CPI is expected to rise to 1%, up from 0.8% during the same period. While any disappointment will refuel the speculation for an action by the ECB in its next meeting, and the euro will be sold off again. As for the U.S. session today, further economic figures for the month of February and March will be released, and is likely to show whether the weakness in January is only due to the bad weather or due to QE tapering effect, as we predicted before. Empire State Manufacturing Index is likely to rise to 6.6 in March, up from 4.5 in February. However, we believe that this index may come in also with another disappointment. Capacity utilization rate set to rise to 78.7 in February, up from 78.5, and industrial production may rise by 0.2% in February, comparing to a decline of 0.3 in January. And finally, NAHB Housing Market Index may recover slightly to 50 in March, up from 46 in February. Most of the U.S. figure is likely to be weaker than expected. However, the bad weather will be blamed again. However, also the Fed is likely to keep withdrawing its stimulus package by another $10 billion this week, while we believe that there is a chance to pause the QE tapering next month due to the ongoing weakness. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching. Have a good week ahead.